What's up, you guys? It's Matt here. Everybody is trying to find a reason as to why the crypto market decided to crash. If you haven't seen the market, it's significantly lower than where it was. Now, we're going to go through exactly what that difference is and exactly the reason as to why the crypto market crashed. It's very simple to understand, but we always like to make it a little bit more complex and try and just get a breakdown for why we're seeing this happen. But if we look at the chart, we would understand exactly why this has happened, as well as understanding maybe the different portion to it that probably did add fuel to the fire, so to speak. So guys, if you could hit that like button, hit that subscribe button, hit that notification bell for more of these videos. Also, make sure you check out some of the links down below. It does help out the channel. And if you guys want to follow me on Twitter, follow me on Patreon, those links are in the description. We also have a link for HG Access if you want to sign up for that. And don't forget about my referral link for Margex if you want to start trading with that platform. It's a great platform. I honestly really like it. You can leverage trade up to 100x. You can also leverage trade with 5x, and you could start with a minimum. You could start with $1 if you wanted to. If you wanted to trade at 5x, you could start with $10 or whatever you feel like starting with. You could end up making that move with a small amount and testing the market. So feel free to go ahead and check out Margex. There's no minimums, no KYC, so definitely give that a look. So let's talk about the crypto market, because if you didn't know, if you lived under a rock or you decided to just throw all your crypto to the side and not worry about it, treat it like the old rotisserie chicken commercials, right? Where you set it and forget it. You have the whole crowd going with you. Set it and forget it, right? That type of thing. If you did that, then you wouldn't have seen what happened. What happened today is that we see the market that has crashed quite a bit. It's starting to come back a little bit, which is definitely a good thing. In the last hour, it hasn't really moved the right way, but we are seeing Bitcoin on the right side of 39,000. And yes, I said 39,000, not 40, not 42, not 45. 39,000. So it has broken below that $40,000 barrier that we were seeing as a strong level of support. But if we looked a lot closer, we would have seen something different, right? And I can definitely say that I didn't look very close. I should have looked a lot closer. But either way, I was looking to hold on for a long time. The only thing I wasn't looking to hold on to as it does crash down is going to be my Margex account, which could be liquidated if it gets to a low enough point. But let's talk about something that's in the news that's really adding kind of fuel to this. So we currently see that the market is at a $1.52 trillion market cap. It's down from a $1.8 trillion market cap. That means that it's dropped basically $300 billion in the last couple of days, in the last week or so, right? Since the ETFs were out there and trading and active. And a lot of people are talking about these ETFs and how those are the main reason, because ETFs do create a lot of negativity. While that is true, ETFs do create a lot of negativity. That's not the sole reason as to why you're seeing this drop. It's more or less, for me, as I look into it, traders that are doing that. And we'll get into that in a little bit. We currently see Bitcoin that's down 3%. It's at 39,400, so it has risen from the $38,000 level that it was at. Ethereum is at 2,200. You're seeing BNB that's at about the 300 mark. Solana that's at 82 or $83. XRP that's at 51 cents. Cardano that's at 46 or 47 cents, and so on and so forth, right? Dogecoin, Avalanche, Tron, everything seems to be down. It's just a sea of red when you look at this middle column. 24 hours, a sea of red, really. As well as the last 7 days. Everything seems to be down in the last 7 days. The whole market is down $300 billion, almost $300 billion in the last week or so. So I can understand why, right? Now, as you see that, there's news that talks about the Grayscale Bitcoin ETF, and talking about how FTX sold 1 billion of Grayscale's Bitcoin ETF, explaining much of the outflows, meaning that there are outflows of Bitcoin and of the crypto market, and creating a lot of negativity within the crypto market. Now, a lot of people are looking for these explanations, so they're putting out a lot of things like this and saying, while this is true, while this does create negativity, it's also not something that really changes a market by $300 billion. It doesn't. You know what does change a market by $350 billion or $300 billion? Is the fact of a standard pullback from a resistance point that we were going to see no matter what. I talked about how the resistance point that we will see is around the $50,000 mark. Did I think we were going to pull back down this much, this steep? No, I didn't. I thought it was going to be more of a trickle off. Like it was going to be something that happens over time throughout the next 2 months. And then we get to the Bitcoin halving and then things start to push up. That's my thought process. And I thought it was going to come back to the 200 EMA. If you even take a closer look at this, right? If we go over to Margex. This is Bitcoin and what we're looking at in Margex. If you guys want to start trading in Margex and, get this look, be able to leverage trade, you can trade up to 100x leverage on Bitcoin, 50x leverage on XRP, a lot of different things. Feel free to check that out. The link will be in the description. But if we look at all history of Bitcoin, this is candlesticks by the day, we would see that we saw these highs and how they have pulled back. And if you look closely, you have this yellow line. This yellow line is the 200 EMA. It seems to react very heavily off of the 200 EMA. Whether it comes back and touches it, sometimes it doesn't come back and touch it. Sometimes it just, reacts off of it and, bounces off of the, let's say, aura of that line. So we've seen this react around that area, create it and use it as a point of support right here, as well as a way of resistance, right? You see that resistance that's there. So it has pushed up. Now, what do you typically see? You're looking for a lot of these support levels in order to gauge a system, gauge where things will go. And if you look closely, where we got to, I drew a line right here. Where we got to was about the $49,000 to $50,000 mark for Bitcoin. This is a significant level that we most likely, and I thought we would, resist from. Now, when we zoom in, we're going to see the touch points, right? Touch point at 200 EMA, touch point. And then now we get very, very far away from the 200 EMA. It's trying to play catch up. Eventually, it's going to come back to earth. We knew that was going to be the case. So it's just a standard look, a standard process within the chart. It's not necessarily just because of, Grayscale doing this or the Bitcoin ETFs doing that. It was set up from the moment we said go, right? The moment this started to increase and really push up, that's the moment where we were like, all right, well, this is still not a level where it looks like it's going to resist hard. But up here, once it does get up there, it looks like that's a level to where it's going to resist hard. And that's exactly what it did, was it resisted. Now, I didn't expect it to resist this hard. I expected it to go like this. I expected it to go from here, maybe like this, and then get to about 40 something thousand, somewhere around here, as this is playing catch up. And then it would have caught up with the price point and it would have played touch point, or it would have touched down on earth at $40,000 and not break below that point. However, it did break below that point, currently at 39,300, 340, 330, whatever. And it did get down to about 38, low or mid 38s. So it shows that maybe this is going to be something that does slowly play that touch point and get down to 40,000 to do that, but it has resisted lower and broke lower than $40,000 in the meantime. This means that we have a little bit more bearish activity, and we're probably going to see a touch point of the 200 EMA coming very, very soon. It's just whether it's going to be a 200 EMA touch point over here, which honestly would be closer to April, as we see that touch point, and then it's going to break up, which honestly, that makes sense. April is the halving. Seeing that touch point over at the halving or close to the halving makes sense before the halving happens and then it blows up. Again, this is just speculation and exactly how I feel this as I do go through it. I don't know what is happening there, but for some reason this air turned on. Anyways, hit that like button, guys. Hit that subscribe button. Hit that notification bell for more videos like this one. Hopefully you guys hear me. Make sure you check out some of the links down below for Margex, for my Patreon and all that stuff. I'm going to get out of here, and I'll catch you guys in the next one. See ya.